Gold prices have been stagnating, but here at a Hong Kong distributor, they're making more gold bars than ever. That's because investors are betting the precious metal will hit another red-hot phase and maybe even top its all-time high. Gold bulls are squarely focused on the ailing US economy, and the question for many is not if there'll be another round of easing, but when.
That when we see a little more reflationary monetary policy from the Fed in the U.S., that it will kickstart the next leg up in the bull market. 2,000 is just a stopping point on the way to $3,000 and maybe $4,000 before this cycle really reaches its peak.
The bullish gold views gaining traction. Most respondents in a JP Morgan survey expect prices of the metal to rise in the next 12 months, with the most popular long-term target $2,000 an ounce.
The most momentum will come in Q4. The reason is in Q3 we will see a lot more quantitative easing or lowering of interest rates by different central banks around the world, and that should provide some moderate upside to gold.
Others believe the rally will come later, when ratings downgrades drive investors to the safety of gold.
For 2013, with the risk that, let's say, the US is going to get a downgrade in terms of their credit rating, I think that's going to bode well for gold prices.
And even if further easing or downgrades aren't on the cards, investors should be able to count on China, whose share of global gold demand's skyrocketing.
We might not go as high as we otherwise would without more accommodation in the U.S. and Europe. But Chinese demand is on a real upward growth trend that should last for a number of years.
Imports from Hong Kong are a top indicator of Chinese demand and have been picking up in recent months.
We recorded a 20% increase in our trading volume, especially in physical delivery, during the last 2 months. And we can foresee a very good season during the fourth quarters of this year.
Gold's regaining its luster as the world economy continues to weaken. And as conditions worsen in the US and Europe, demand's unlikely to cool down anytime soon. Tessa Dunlop for Reuters.